Good morning, Black America. Grand Rising, beloved. I'm Crypto Stock Markets, and here's what's moving the market today. Crypto is growing up, y'all. And when markets grow up, rules show up. California has officially been enforcing its digital financial assets law. That means crypto companies serving California residents must obtain a state license. No more operating in the gray, no more loose compliance. If you want access to one of the largest economies in America, you follow the rules or you leave. That is not random, that's maturation. When regulation increases, two things happen. Weak companies disappear, strong companies consolidate power. Stop thinking regulation kills crypto. Regulation reshapes crypto. Smaller exchanges without capital to handle compliance costs will either merge or exit. Liquidity tightens, volatility increases, and disciplined investors gain advantage. This is how markets transition from speculative playgrounds into institutional frameworks. New York did it with the BIT license years ago. Now California is building its own structure. When major states tighten oversight, federal clarity usually follows. That is the pattern, so do not panic. Prepare. Make sure the platforms holding your assets can survive regulatory pressure. If they cannot, you are exposed. Now, while regulation tightens, institutions are not running. They rotate. Harvard reduced this exposure to a Bitcoin ETF. At the same time, it initiated a new position in an Ethereum ETF. That is not abandonment, that's allocation. Bitcoin represents digital scarcity. Ethereum represents programmable infrastructure. One is digital gold, the other is digital plumbing. Institutions do not operate on emotion, they rebalance based on the narrative shifts and infrastructure growth. When capital rotates, pay attention. Retail investors sell headlines. Institutions reposition portfolios. Do not confuse rotation with retreat. This market is not dying, it is reorganizing. And when markets reorganize, the informed build, the emotional react. You are not here to react, you are here to move 2 steps ahead. Regulation is tight. Institutions are reallocated. That tells you the asset class is stabilizing. Speculation fades, structure replaces it. And structure is where wealth compounds quietly. Now we move to the third development. Because the future is not just regulation or ETF flows. The future is autonomous AI operating on blockchain networks, and that changes everything. Artificial intelligence is no longer just generating content, it is preparing to transact. There is an emerging framework being called Web 4.0. At its core are autonomous AI agents powered by crypto infrastructure. These are programs that can hold wallets, send payments, receive payments, manage assets, execute trades, all without human intervention. Crypto gives AI economic agency. Without blockchain, AI cannot independently move value. With blockchain, it can. And AI can pay another AI agent for data. It can allocate capital into liquidity pools. It can rebalance yield strategies. It can operate 24 hours a day without fatigue. That is machine to machine finance. That is infrastructure level change. Stop thinking short-term price candles. Start thinking economic evolution. If AI agents begin transacting on chain, demand for programmable infrastructure increases. Ethereum becomes more relevant. Layer 2 scaling becomes critical. Security becomes non-negotiable. Compliance becomes mandatory. You see the alignment? Regulation tightens, institutions rotate, infrastructure demand expands. That is maturation. When technology shifts from hype to infrastructure, money flows differently. It flows quietly, it flows structurally. It does not scream on social media first, it builds underneath. Black America, you do not chase the loudest coin. You position for structural growth. You hold assets on platforms that can survive regulatory tightening. You study institutional allocation patterns. You understand where infrastructure demand is forming. You stop gambling, you start allocating. This market is not about memes anymore. It's about integration. Integration into the financial system, integration into AI systems, integration into regulatory frameworks. When that integration completes, prices reflected. But by then, early positioning is gone. Do not wait for confirmation from television. Do not wait for headlines to feel comfortable. Build positions based on structure. Remove emotion. Protect capital. Grow capital. Stay disciplined. This is not a playground. This is financial evolution. And you either prepare for it or you get priced out of it. I'm Crypto Stock Markets, keeping you 2 steps ahead of the market on Good Morning Black America.